At Insightful Value, we look for unloved companies with strong fundamentals, and PVH Corp might just be one of them. With the stock trading well below recent highs, is this global apparel giant being unfairly discounted by the market? This video is for informational and educational purposes only, not financial advice. If you're into value investing or just love spotting opportunities where others don't, hit that like button and subscribe for more. PVH Corp is the name behind iconic fashion brands like Calvin Klein and Tommy Hilfiger, with a global footprint and a history that dates back over 140 years. But in the current retail environment, fashion stocks have been under pressure, and PVH is no exception. Despite macro headwinds, PVH has been executing a focused turnaround plan, especially in Europe and North America. In the latest earnings report, the company posted full-year revenue of $9.2 billion, with Calvin Klein and Tommy Hilfiger delivering solid results. Earnings per share came in at $10.68 on a non-GAAP basis, well ahead of market expectations. PVH is maintaining strong gross margins around 57%, which is impressive in the context of cost inflation and supply chain constraints. Operating margin sits near 10%, which shows operational resilience even as consumers shift spending. From a value angle, here's what's interesting. PVH is trading at a forward PE of around 9. That's well below the sector average and suggests investors are still pricing in a lot of pessimism. And yet, the company has reduced debt, bought back shares, and recently reinstated its dividend, a sign of confidence in future cash flow. Speaking of dividends, PVH suspended payouts during COVID, but has since restarted them at a conservative rate. That's not necessarily a bad thing. It gives the company flexibility while still rewarding shareholders. The latest quarterly dividend is 0.0375 per share. Not huge, but growing again. The risks? Retail is notoriously cyclical. PVH is exposed to consumer sentiment, foreign exchange, and fashion trends, none of which are easy to forecast. Also, China, once a high-growth market, has become more volatile. And while the company's brands are globally recognized, they aren't immune to fast fashion or new market entrants. So why invest now? If you believe in brand value, cost discipline, and management execution, PVH's current valuation could be a solid entry point. Why not? If you expect continued economic softness or have concerns about the fashion industry's transformation, there may be safer plays. But PVH has shown it can navigate downturns and emerge stronger. At Insightful Value, we focus on deep dive research of undervalued companies like PVH. We strip out the noise, decode the data, and bring clarity to complex decisions. Whether you're a new investor or a portfolio pro, our insights help you think critically about potential value. Find more data-backed analysis like this on insightfulvalue.com. And don't forget, like this video, subscribe to the channel, and visit us at insightfulvalue.com for more undervalued stock breakdowns made simple.